Well, hello, everyone. Again, I'm Ron Clark. I'm the editor of LOMA's Resource Magazine, and we welcome you to our webinar today on eSignatures, the changing landscape for life insurers. We're presenting this webinar in partnership with eSign Live by Vasco, a leading provider of eSignature solutions. And we're very pleased to hold this webinar for our LOMA members since it deals with an important subject for the industry. The use of eSignatures is growing, and it can help insurers serve their customers better. We'll have two speakers today. Our first speaker will be Colleen Risk. She's the Senior Analyst for Celent. And our second speaker will be Andrea Masterton, Director of Corporate Marketing for eSign Live. And then, as Gerald said, we'll have some time for questions at the end, so you can send in questions using the question box. And we want to remind everybody, the webinar recording will be posted in the near future on the LOMA website on our webinars page, and we'll send all of you an email telling you when and where it will be posted. So now I'll turn it over to Colleen, who will get us started. Colleen?
Thank you, Ron. Hi, everyone. As Ron said, my name's Colleen Risk, and I'm a Senior Analyst at Celent. I'm very excited to be with you today. My area of focus is life and annuity insurance. I've been in the insurance industry for 30 years working with vendors and insurance companies, and I'm very excited about the transformation that's happening in insurance today. Insurance is going through a digital revolution similar to other industries and for similar reasons. The reasons for this transformation are new technologies such as artificial intelligence, natural language processing, robotics, and machine learning. The changing consumer expectations, the expectation has been Amazon, as people like to say, need to be easy to do business with, and you need to be able to do it in a way that is personalized and individualized to the consumer. Economic drivers such as the low interest rate environment and evolving business models, and all of the above are driving new ways of doing business, which is resulting in the changes. Leading insurers are learning to transform their typically risk-averse culture into one that embraces technology. As we move through the presentation, we'll see how digital is impacting life insurance through a few use cases that highlight eSignature. Digital is also driving growth in the eSignature market. Mobile access to forms and increasing use of software as a service for software deployment and consumer expectations for digital interactions are some of the reasons for the growth. 74% of insurers surveyed in a recent new business and underwriting benchmarking report said that their life insurance companies were using some form of eSignature in their dealing with customers or agents. So now we're ready to jump right in, and we're going to talk about, in response to the digital transformation, today's insurers are removing paper from everyday processes. The adoption of e-applications, web portals, and mobile technologies are helping to drive the change, but we at Celent believe it's primarily driven by the customer expectations set by other industries who are offering easy-to-use digital processes. Consumers expect companies to be easy to do business with and will choose the companies they purchase goods and services from based on that ease of use. There's an increased emphasis on cycle time and cost in today's low-interest rate environment. Operational efficiency was the #1 initiative for 2017 based on our CIO survey that was done in January of this year. eSignatures provide a secure means to offer an end-to-end digital experience. It meets the requirements of being easy to use, improves operational efficiency, and provides obvious benefits in a number of use cases. eSignature technology has matured. It's driven by the experiences of many adopters, both inside and outside of the life insurance industry. The ability to sign electronically is becoming the norm. This slide shows some of the common use cases for eSignature. The most prevalent usage of eSignature is during the new business acquisition process. When applying for a policy using an e-application, it's the norm to use eSignature. The ability to provide an immediate signature authorizes the insurer to collect data that the insured can, and it can provide an immediate decision to the insured, or at a minimum, move the policy to the next stage of evaluation. Policyholder self-service is another area that's seeing a high level of adoption for eSignature. This is a move away from providing a PDF form on the portal that the user has to download, sign, and mail back to the insured, to being able to go online, make the change, electronically sign it, and then have an immediate change happen to the policy. This would be very useful for things like address changes, billing method or mode changes, and beneficiary changes. Another area of keen interest is e-delivery. The insurer can provide a secure link to the contract via a portal where the policyholder can log on and sign the document. This saves mailing time and provides instant access to the policy. It also increases the customer's satisfaction by reducing the wait time necessary to receive the policy. We, as you know, are very big on doing surveys with our clients and interviewing our clients. And this is a question that we asked our clients recently. We said, if you're planning or have already invested in a digital transformation initiative, what is the most important? The top two are sell and service of products online, and it's followed by business process automation with things such as straight-through processing. For both of these, eSignature plays a major role. Without eSignature, the process is only partially automated. We've learned in our surveys that the consumers expect to be able to receive service in the same way the product is sold. The expectation is that if an electronic application is used, the ability to sign, receive, and service the policy should be electronic as well. Now we'll set the stage for how Celent defines digital. Digital is used to achieve any or all of the following four goals: leaner, smarter, faster, and better. Leaner can be defined as reducing expenses or increasing productivity. An example of leaner is a zero growth in expenses year over year. Smarter is getting it right, whether that's pricing, underwriting, or claims adjusting, and getting it right with greater consistency. Examples are pricing risk more accurately than your key competitors, or lowering levels of underwriting or claims leakage. Faster is demonstrated by shorter cycle times. This is reducing the average time from submission to policy issue. And finally, better is making the experience more engaging, satisfying, immersive, or fun. Things like pre-filling a submission based on a photo or a driver's license, or providing a real-time interaction where that there's no waiting for the customer. A colleague of mine recently wrote a blog that was entitled, "Remember when we had to wait for things?" And I think that that's a true definition of where we're headed. Nobody wants to wait for anything. Everybody's looking for instant satisfaction. We're now going to move ahead and look at how eSignature use cases can fulfill some of these digital goals. The first use case is new business acquisition. The digital benefits leaner. My colleague Karen Monks and I published several reports over the past year about new business acquisition. We covered vendors from illustrations, which is another use case for eSignature, e-application, new business and underwriting, and eSignature. We also created a digital capability model, which insurers can use to gauge their level of automation for the new business process. Karen and another colleague, Tom Scales, did a benchmarking survey. What we found is that insurers are working to become highly automated, but still have a lot of room for growth. Less than 25% of the applications are received electronically. In some organizations, that number may actually be zero. Insurers who use e-application are spending on average approximately $180 less per application. That's huge. This is due to the much lower not in good order rate for e-applications. It's easy to understand that not having to follow up to obtain information that's not filled out on a paper application saves both time and money. It can also allow staff to move to a higher level of work, which will increase the staff's satisfaction with their job. It was always surprising to me when I worked at an insurance company, and sometimes even shocking, to see the number of paper applications that were received which didn't have proper signatures, either from the agent, the insured, or both. The ones that we got that didn't have either signature was always just a moment where you had to think, what in the world was this agent thinking? The next use case is for e-delivery. This use case demonstrates the better digital benefit. In a survey of insurers, when asked what benefits they expect from e-delivery, enhanced customer service is expected by all, and improved reputation is expected by over 85%. While most insurers believe there is time savings to be gained, which will improve their operational efficiency, they believe there will be less impact on the number of resources required and the budget. In fact, when talking with a couple of Tier 1 insurers at a recent conference, they each said that they're doing e-delivery because it's expected rather than because they think it will save them time or money. They said it would enhance their reputation as a digital leader. In the same survey, we asked insurers how important each of the signature methods of eSignature, voice signature, and wet signature were to the e-delivery process. Over 85% of the insurers ranked eSignature as very important or necessary to the process. My only assumption for why it wouldn't have been 100% is that the 14% that ranked eSignature as not important were not using a true e-delivery process, but more likely directing the insured to a portal where they would download, sign, and mail back a signature page. In our definition of e-delivery, this wouldn't be a true end-to-end electronic process because that would require no manual intervention. And the final use case we'll cover is faster. Automation decreases the cycle time from submission to delivery. Each of these blocks in this graph represent a number of days. In the benchmarking survey, the cycle time for companies who've automated the process for fully underwritten cases is 17 days versus the 39 days for insurers who are only partially automated. The savings of 4 days in the app to home office process is fully dependent on having e-application with e-signature in place. Another large savings, which is actually the largest savings in time, is the 15 days for obtaining the requirements, and that's accelerated by having e-signature. An e-signature allows the insurer to order requirements within minutes of receipt of the application rather than waiting for the paper application to be received at home office, data entered, and reviewed prior to doing the ordering. For simplified issue cases, the collection of the e-signature provides the ability for an underwriting decision within minutes to the potential insured if the evidence collected falls within the established rules. Now we're going to switch gears a bit and move from use cases to the providers of e-signature solutions. This spring, we sent a request for information to 45 vendors across the globe who provided solutions for e-signature for the insurance industry. Of those, 11, which you see here, chose to answer the RFI and are featured in our Spectrum report. The vendors profiled provide solutions to the insurance industry either through direct licenses or our third-party providers. A number of acquisitions have occurred since the last time Celent looked at e-signatures in 2013. This has introduced players from security, certification, and document management to the traditional e-signature vendor mix. Overall, the number of vendors offering solutions to insurance is expanding. Insurers are adopting e-signature. Questions that were at one time about the viability of e-signature for insurance have been answered, and the legitimacy is no longer an issue. They are a key element in improving operational efficiency. There are a number of key capabilities that are on the must-have list when looking at e-signature solutions. The solution should allow both the sender and the recipient users to sign documents on a variety of devices and operating systems. Encrypt and secure communications and share documents between the users of the solution. Should also enable preparation, execution, and management of transactions in an all-digital environment. The solution should be able to track document status and notify users when actions are required, such as to sign or approve. It should enable the users to define user roles and permission rights, both internally as well as for external users, such as contractors, partners, or customers. It should offer built-in document creation and storage capabilities or integrate with third-party software solutions that provide document creation and storage features. And finally, it should provide enterprise-level security and advanced authentication methods to validate signer identity. On this slide, you'll see an example of one of the comparison tables that's in the report. We've used eSignLive as our example, but each of the vendors on the previous page has a column in the comparison report. This table compares the common components or modules that are offered by the solution providers. For all vendors, the components of electronic delivery of the form to be signed and the eSignature function are available as part of their solution. Although many vendors offer an integrated solution with all components, it's also common for solution providers to have partnerships for forms and document retention, as well as archival and identity authentication. Other components that should be expected within the solution are workflow, transaction monitoring, reporting and analytics, and the ability to be omni-channel. There are a number of ways to compare the solutions. Karen and I chose to compare based on deployment options, access methods, signing approach, and security features. These are all in tables within the report that will allow you to evaluate the solution based on these capabilities. The profiles for each vendor provides information on revenue, technology, components, and their customer base. We hear a lot of times that it's hard to differentiate between the eSignature providers, but we feel that that's not always the case. When it comes to differentiation, ease of use is very important. However, security is now at the forefront. Some of the things you should look for from a security standpoint are signed documents that remain valid in the long term, signatures that create a tamper-evident seal on the document, signatures that are not proprietary or linked permanently to a vendor, audit trails that show the whole story. It should be a visual step-by-step audit of the process, not just some summarized mini view of a transaction. Signers who are strongly verified and authenticated to be sure they are who they say they are. And a platform that produces signatures and evidence that a customer can trust, whether the vendor is there or not. We say that the litmus test to assume your eSignature solution goes away tomorrow, and to assess what you would have available to you. Other differentiators are the scalability. Can the solution scale quickly and cost effectively, both locally and globally? The edit capability. Is it possible to edit a document after it's saved and not have to start over with a new document? And the ease of use. Does it have a user-friendly UI? Does it have pre-built connectors and easy integration into your core systems? So now we've discussed the legitimacy of eSignature and that the adoption rate for insurance is surging. We've also discussed some of the must-have capabilities. You may now be wondering, how do you make the decision on which solution to choose? Celent is offering some questions that can help you make and create a short list of vendors. The questions are, which type of solution is the best fit for our company's business model, risk tolerance, and corporate culture? What components do we already have in place, and how can they be leveraged, which is an important one? Does the vendor support the deployment methods our insurance company requires, such as software as a service, cloud, online and offline accessibility? Is it mobile? Do we want a solution that works in an integrated component of third-party software, such as our CRM or document management, or are we looking for a standalone solution? Will the vendor be around long after the system has been implemented? And does the vendor have sufficient staff to meet my needs during implementation and after? The vendor report that Karen and I published will provide the data needed to answer these questions. And as a bonus for attending this webinar, eSignLive is making this report available to you. The use cases that we looked at provided a view into the benefits of eSignature. In addition to the use cases, there are a number of benefits that eSignature provides for insurance. The first is eliminating errors. As we saw in our leaner use case, incorrect paperwork adds cost and frustration to the agent and the customer. Secondly, improving compliance. Missing, misfiled, or incomplete paperwork can compromise an insurer's ability to demonstrate compliance or defend against disputes. Electronic audit trails and process design best practices mitigate this risk. Thirdly is the more time for producers to sell. The time that agents spend chasing signatures, fixing paperwork, and locating paper files is time that could be allocated to more productive tasks, most importantly, selling. It can shorten the app-to-issue time. As we saw in our faster use case, eliminating the need to print and assemble policies for signature can provide dramatic improvements in the cycle time. The better use case showed how e-delivery can improve the buying experience by providing approvals within minutes. Next is the support for multi-channels. Mobile devices, laptop, desktop, online, and offline support, or all parts, can all be supported with eSignature solutions. And then finally is the potential for customer retention increases, and who isn't looking for that? The ease of doing business and customer satisfaction leads to increased take-up rates, retained relationships, and better reputation. So in conclusion, we have 4 observations about eSignature. First is that eSignature is strongly in place for life insurance, and we expect this to gain momentum as insurers become more digital. The next is that the legality of eSignatures is no longer an issue with the global standards that have been established. In a number of surveys, Celent has found that consumers expect the buying experience for insurance to match other industries, where eSignature is considered the norm. And finally, there may be challenges, but they are manageable. Most insurers have to deal with legacy environments that have created ways to work around them to provide a digital experience to their customers. So I want to thank you guys for your kind attention, and I'm going to turn this over now to Andrea to talk a little more about the eSignature solution.
Great. Thank you, Colleen. And thank you, Ron and LOMA, for inviting us to join you today. So like Colleen mentioned, I think we know the eSignature market has evolved and, you know, clearly, as Colleen mentioned, has many mature solutions available to meet the needs of insurers. As a vendor, Colleen mentioned this as well, we often have heard that statement that all you vendors look and sound alike, which I recognize makes it difficult for you as insurance companies to have confidence in selecting that long-term partner that's going to, you know, be a critical component of your digital tech stack. I'm confident that the tools and the advice that we just heard from Colleen in the Celent report are going to be helpful. But what I wanted to do for the balance of the presentation is offer an additional lens through which to consider evaluating and comparing vendors. And that is by looking at the adoption rates that vendors are achieving within their customer implementations. When we talk about opt-in or adoption rates, what we mean is when eSignatures are offered as an alternative to paper, how many are going to go the digital route? So our consumers on board, our advisors and agents on board, we make it a practice to consistently measure adoption rates within our customer implementations. And we can see some clear trends, and that's what I'm sharing with you here. Unmediated transactions where a consumer is self-serving through a process on a website, for instance, will consistently get higher, and we're talking like 99% adoption rates. As soon as you introduce a person, an advisor or an agent into the equation, adoption goes down. So what can we conclude from that? What does that tell us? Basically that if consumers were left to their own devices, there's no reluctance and hesitation to e-sign, that consumers are in fact ready. But even for mediated transactions with advisors or agents, adoption is still going to vary based on where that transaction is taking place. So are documents being signed in person on a shared device like an iPad, or is the client still sitting at home in front of their computer but being guided by the agent? That, in our experience, is the single most important factor in determining those adoption and opt-in rates. So if a transaction is taking place remotely but still mediated, adoption is going to drop from, let's say, 99% to about 90%. And then if the transaction is taking place in person, we see average adoption rates hovering around 70%. So for sure this varies, but it's going to be consistently lower, and that's kind of the trend it's going to fall. So this would suggest that the problem we have here with adoption rates is not with your end clients, it's not with the actual insured, but it's with your advisors and agents. Luckily, the good news is that there's things that we can do to drive adoption higher, and that's what I want to talk to you about. And that's, the first thing we can start with is workflow. Workflow is the single biggest factor that will determine what percentage of your customers are going to opt in for the digital process. So eSignatures, to start with, should integrate seamlessly with your existing systems and processes. And to illustrate this, I'm showing you a really simple diagram depicting a generic business process. It could be any business process, really, starting on the left with your clients. I mean, in truth, this could be your employees or your business partners as well, but in this discussion, we'll say those are your clients on the left-hand side. And they're engaging with you through any number of channels, web, mobile, in person. And a point comes in your processes today, processes, my Canadian is coming through, in your processes today where a contract or a form or a document needs to be signed. And in order to do that, data needs to be captured and merged with your document templates. I'm still on the left-hand side here of the diagram. So for new business sales, that's going to most often be taking place with e-forms or with an exchange platform or perhaps like an advisor desktop or portal. Once the final document package is ready for signature, it gets handed off to the eSign platform, and that's the first blue arrow that you see there on the left. And essentially, just think about wherever the print button is located today in your process, you want to replace that print button with a send for eSignature button. So the number one priority here is to make it easy, make it really easy, make it easier than pen and paper. The upstream process for how advisors and agents are setting up or starting e-signing needs to be easier than what they're doing on paper, because if it's not, they're going to stick with that tried and true process. And you want to keep, in an ideal world, you want to keep the rep in that environment that they're really familiar with, that they're already working in. Once the documents are handed off into that little cloud there, the eSign platform is going to take care of all the steps needed to gather those legally enforceable signatures and then hand back the final signed, those secured records to your downstream policy admin systems, your archiving systems, and that's that second blue arrow there on the right. But if driving adoptions are our number one focus here and our number one goal, we do need to look more closely at what's happening inside of that cloud, what those steps in the eSignature workflow are. So we're going to come down 15,000 feet out of the clouds there and look at this more closely. We're often asked, how do we build the optimal eSign process? What's the best way to capture a signature? What's the most legally enforceable way? What's the best way? And the truth is, there's really no one size fits all. Different use cases are going to have different workflow requirements, and the best way to address this is to have a lot of flexibility in your platform. And what you see here is a visual representation of what I mean when I'm talking about workflow flexibility. This, once again, is a generic eSign workflow consisting of 7 basic workflow steps that you're going to need to go through. And you can see under each one of them, there's several options for each of these steps. And the ideal or that optimal workflow is really going to come down to not just the process, but the channel and the use case that you're automating. And I can't say this and emphasize this enough. Whatever workflow you build, you should expect to monitor it, capture data and metrics around it, test it, refine it, test again, refine it some more until you get the adoption you want. Our customers that have achieved the highest adoption rates, it's not a case of just building it once and then leaving it. But if I start on the left-hand side here and I walk you through the workflow, so the left-hand side is the point at which that first blue arrow was handing off the documents. So like I said, you want the flexibility to be able to choose how's the signer going to get access to the transaction? How do they basically start e-signing? Are they going to get an email invitation, which of course only makes sense if the signer's remote, sitting on their own device? Yet this is how a lot of platforms work, and earlier standards were written that regardless of where the signer was, an email invitation was always getting sent off. So that's an example of, a lack of flexibility in workflow that doesn't really make a lot of sense. If they're in person with an agent, you would actually prefer the agent to launch the transaction from perhaps an embedded link within their desktop application, right? So like I said, that print button turns into a send for eSignature button. They click on that button and it launches the eSign transaction, and then they can simply hand over, for instance, an iPad or some kind of touchscreen device to the customer to review the documents and sign. That's access. Next, Colleen mentioned this, how will the signers be authenticated? How are you going to be able to identify those signers with confidence? And I just want to pause here for a moment because truthfully, it's the most common pitfall that we run into, that authentication step. There's an unfortunate tendency to place a higher standard for security and have a higher sense of risk on digital processes than on their paper counterparts. And user authentication is the step in the workflow where we see this happening the most often. So if you can imagine, overly complex requirements for PINs and passwords, or heaven forbid, even, end signer certificates are definitely going to lower adoption. They're going to get in the way of adoption. And I mean, just anecdotally, if you look at Europe, for instance, and they have built into the legislation some pretty complex requirements for authentication. That's one of the reasons why adoption has been lower over there is because of these challenges. The good news is here in the United States and Canada as well, we don't have those same requirements, and there are many simple and equally reliable approaches for identifying signers. If you think, to start with, the fact that most life insurance sales are still involving an in-person meeting, the tried and true way of verifying a government-issued ID should be the approach, not just for the paper process, but also for the digital process. So verifying those government-issued credentials. For remote signers, we're seeing two-factor authentication is the most common approach. So step one would be using an email verification type approach combined with something else like dynamic KVA, knowledge-based authentication, or a one-time password maybe that's sent via SMS text to a mobile phone. So there's lots of different approaches to authentication, and you just want to make sure you strike that balance between usability and security when you're designing that step of the workflow. Moving on, so the documents and disclosures obviously need to be presented to the signers for review, and most of the time this is going to be done on screen, but there are cases when a hybrid process makes sense. So you could allow customers to review documents on paper, but then tie the paper review back into the electronic process. But once again, for most workflows, we see document review happening on screen. You might want to capture additional data in a form at the time of signing. So like a checkbox, for instance, for additional optional pre-approved coverage could be one idea. How are you going to capture intent? This is a part of eSign that most often comes to mind for folks when they think about eSignatures, is that moment when you're actually signing. So are you going to use a click to sign, or are you going to capture a handwritten signature image? For in-person transactions, it's often preferred to capture a handwritten signature image, even though it's definitely not required or preferred by law. But if a touchscreen is available, it's a nice touch. It's easy. It's familiar, but certainly, again, not required. And for remote e-signing, a simple click to sign is definitely the best, not knowing what the end signer is going to have in terms of device or capability. Finally, you want to make sure that there's reliable and verifiable standalone copies of those e-signed records available for everyone to download, right? The client, the agent, the insurance company, everyone can walk away with their own verifiable copies of the documents. And then throughout the entire eSignature workflow, for sure you want to build in workflow rules to make sure, like Colleen said, you're not getting documents back with not in good order, errors and missing signatures, missing pages, and all the rest. So as you can see, there's quite a bit of flexibility in terms of how you can build your eSign process. And like I said, once you've mapped out a workflow and you've implemented something, you should continue to test. And that's the beauty of having a digital or an online transaction, right? You gain visibility and insight into what's happening, where the bottlenecks are occurring, what might be causing signers to pause and drop out of the digital process. You've got that visibility that you've never had before. So that's certainly something that you want to leverage. Another best practice that we've seen is around branding. And your company, no doubt, all of your companies invest a lot in their brands, and your customers trust your brand, and that's why they're coming to you. And that's why it's important, especially at that moment, if you think about it, that moment where you're asking your customer to sign on the dotted line, so to speak, that you don't introduce another brand and that you make experience really as seamless as possible from a user interface perspective. So if you think about what that means from an e-sign process, we're talking about more than just making it possible for you to upload your logo to our eSign platform or change the color and the font of some of the text. You want absolute complete control over the layout of the signer interface. You want it, to be presented from your own web domain. In addition, you want all email and text messages that are being sent out, not just to be customizable in terms of the content, but also the sending domain, so that it really, truly does look seamless. And why that's important is because it helps maintain trust between you and your customers. And the last thing that you want is for a third-party e-signature vendor to be sending emails out to your customers, using the eSign brand and the eSign company's sending domain, which may look like a phishing scam that your customers would just ignore or wouldn't trust. So we talk about not just branding, but we talk about white labeling the complete experience. And the result is a more trusted transaction, a better customer experience that at the end of the day is going to help drive those higher completion rates and adoption rates for the digital process. That's definitely been our experience. Moving along. I've got a lot of builds in this slide. I'm going to build them all out for us. There we go. Historically, within the insurance industry, within this community, and I mean this with all due respect, there's been a bit of a tendency to look at e-signatures from a somewhat narrow lens. Colleen, I'm not sure if you would agree with this, but to think about e-signatures as a feature just built into your e-forms or your exchange solutions like iPipeline or eBix. And the challenge with this, I think, as we all know, is that insurance companies and their distributors have lots of products, multiple lines of business, lots of departments that all have documents that require signatures. And over the last 5 years, there's been a nice transition, a nice trend that we've seen towards insurance companies adopting e-signatures as an enterprise shared service. So it's for sure important for the platform to be integrated with those core systems, both the upstream and the downstream that I showed you in the earlier slide. But you want the platform to be as agnostic as a ballpoint pen. So just give the platform a document to sign. Doesn't matter where it came from. Doesn't matter what's in it. And the platform can get it signed. And as you can imagine, when you start to think about e-signatures from this kind of digital tech stack core system perspective, requirements for sure can start to get more complex. And you need to start considering, additional capabilities and flexibility more than anything else. But the benefit is that carriers or independent agents, banks, broker-dealers, the benefit is that when we see that these organizations have a single common platform, is that it does ultimately drive more adoption rather than having multiple e-signature processes to learn throughout the organization. And the other benefit is agility, right? So when we see IT services building in e-signatures, basically building in an abstraction layer between the eSign platform and the business systems, it makes it easier and quicker to bring new use cases on board and make changes to the eSign workflows as regulatory requirements come along, and workflow rules need to be changed. Having that abstraction layer, not having eSignatures, really hard coded into the business systems is a definite benefit. And, I'll offer one last thing that we've heard from some of our customers as well. Adding in that abstraction layer between the business systems and the eSign platform makes it possible and makes it easier for you to replace your eSign vendor. We of course never want that to happen with our customers, and we pride ourselves in our retention rates with our customers. But it definitely makes it easier for you to replace an eSignature platform with another if you need to down the road. If you take this approach. So, as I showed in the earlier adoption stats, consumers are for sure ready for eSignatures. I don't think there's a question of that. Certainly, demographics are going to make a bit of a difference if we're talking about an older demographic. You might run into maybe it's not 99% adoption that you see in those cases, but you might see, something closer to lower 90s. Most often when we aren't seeing opt-in for those direct self-serve kind of use cases, it's for very uncommon reasons like, the two signers, co-signers on a document don't have their individual email addresses or something like that. So we don't see it happening a lot, but there are certainly cases where that's not possible. But, where we're seeing the biggest challenge for adoption, like I said, is in those mediated processes. And that's why change management is as important as workflow flexibility, because you can build the most beautiful, most perfect workflow and have white labeling and everything else. But really, you can't just take that and build it and they will come approach. So here are some really concrete things that you can think about as you embark either on a new project or if you're reviewing your existing eSignature projects. So we talk about involving the key stakeholders early. And this is probably obvious for a lot of us, but it's a best practice that we've definitely seen is not always followed. So early involvement from those select advisors and agents and staff members is going to ensure that not just their feedback is captured and accounted for, but they're obviously going to have a more personal investment in the success of the project. And it's going to give the project more credibility as you start to roll it out beyond that initial, pilot project. The fact that you can point to the involvement of those key stakeholders. For sure, executive buy-in is really important. It's not uncommon as you're making these massive changes, transforming your organization into these digital processes, that resistance might get encountered along the way. Maybe it's going to be legal that raises concerns. Maybe it's IT. Maybe it's another line of business. So we've seen it many times that without executive commitment in these kinds of initiatives can get delayed or sidetracked. So gaining that buy-in early is really important. And of course, to do that, it's important to focus on the business improvements that eSignatures will bring. Colleen mentioned a lot of those earlier on. I think what I like sharing often is, I think we all intuitively have a sense that doing anything digital is going to be leaner, it's going to be better, it's going to be faster. But what's nice is what Colleen showed, and certainly what we can share from a lot of our customers, are those really tangible ROI metrics, right? Something really that can be monetized or calculated in terms of time savings. And when you see the actual, impressive numbers and impressive return on investment, I think that priority and that urgency for the executive team becomes a little bit more real. It's for sure a best practice to start with a smaller, hand-chosen group of technology evangelists and get them using and gather their feedback and tweak that process, like I mentioned, and reiterate if necessary. That's good. That pilot phase is going to be your opportunity to recruit champions and advocates. And in an ideal world, you're capturing and documenting some of their testimonials that you can use a couple bullets down when you're starting your communication efforts. So get those quotes from both advisors, agents, or customers. Training can be as simple as providing just how-to tutorials or videos, but we've seen nothing beats hands-on practice. And because oftentimes one of the reasons agents are reluctant to do this is that they're nervous that that it's not going to work in front of their client, or that they're not going to know the steps of how to work this new digital workflow. So training should be set up in a way that allows agents to gain comfort with the new process, so that when they are finally in front of a client, they're not as nervous, right? And typically this takes about 4 to 6 times to get up the learning curve. You can put incentives in place. They can be effective at gaining rapid adoption, but it's definitely not used by all our customers. It's something worth considering. Communication, I think people just, it's human nature. People need advance warning that a change is coming. It's a good change. You want to be able to answer their questions in advance. You want to reassure them that it's legal, it's secure, and that customers want it, right? We're all on these webcasts learning about this and hearing the stats that Colleen is sharing, but, we need to recognize that the others within the organization perhaps haven't had the benefit of hearing these things firsthand. So just sharing with them that, our customers really are looking for this and want this. And when you're communicating the benefits of the future state to your agents and your staff members, it's really important to communicate it in a way that's personal to them, right? So in their day-to-day jobs, what is the impact that's going to be had on them? Not the company is going to save $1 million if we do this, but this is going to save you 1 hour of work per day or per week. And then also bring in those testimonials that you captured earlier on in the process from the champions and use those as well. Reporting. One of our customers did a really good job of monitoring and sharing KPIs related to their eSignature rollout. They had an executive dashboard built as a tool for keeping an eye on things, but also motivating the team and maintaining that executive engagement. So on a weekly basis, they were reporting on things like the number of users on the system, the number of transactions completed per rep, and then they had a calculator for cost savings per transaction. So they had like a piggy bank showing the total dollar amount saved. So, something small and actually relatively easy, but really effective. So with these kinds of like change management strategies, we can really see that our customers can help push the upper limits of those adoption rates that I shared with you earlier on. So I'm going to leave you with just a kind of a success story. One of our insurance carrier customers is kind of a model for a lot of the best practices that I just mentioned. This particular carrier has 2,000 captive agents, and prior to implementing electronic signatures, they'd been using an e-app for many years, and perhaps this is a similar situation to folks on the line. So they had an e-app, but they were still printing to paper for signature. So as a result, they had limited adoption of the e-app in the first place. The hybrid process wasn't, they weren't motivated to use that and embrace that. And of course, then they were seeing really high NIGO rates still, so that they weren't getting the benefit that they had expected. But by adding eSignatures, they sped up that cycle time for new business processing by 1/3. And today they receive over 75% of all their life, annuity, health across the board new business applications e-signed. And how they got there was really careful change management. They in this case, they did use incentives for agents during just the initial launch period, but they did it in a clever way. They built in the rewards so that they were only issued or the rewards were only given after 6 submissions. And they found that was the magic number that helped agents get over the hump, right, of that adoption curve. And they had a comprehensive communication plan. They started with a launch during their annual sales meeting, and they continued coaching those slower to adopt agents. They pulled in the champions and had them coaching them. And in the end, they're happy with 75% adoption across all products, but they're working on continuing to drive that higher every day. So we're hoping that in the coming months we can report on an even higher adoption rate. So with that, hopefully that's a helpful perspective in terms of the lens through which you can look at different e-signature vendors. Certainly feel free and feel open to asking e-signature vendors what kind of opt-in rates they're seeing among clients that are similar to yours in terms of industry and use cases and size. And yeah, ask questions about how they can support you in making sure that you achieve the adoption rates that you're considering and you're looking for. So with that, Ron, I'll hand the floor back over to you, and we can open the floor up to questions.
Okay, well, thank you, Andrea and Colleen, for the very interesting comments. We've got a few minutes for questions. Let's see, the first question would be, what are some of the biggest internal objections to electronic signatures that you've heard from clients, and how do you help overcome them?
I'll take that first, I guess. Yeah, I mean, the biggest resistance is, as I mentioned, it's often with the frontline staff that are interacting with the clients, so the agents and the reps themselves that are guiding these processes. You know, I think there's a sense, especially maybe among an older demographic of reps, that you know that this is about relationships, and that this is about, you know, personal service and personalized service, and that doing anything digital or online is going to take away from that personalized service, right? That white glove treatment that, you know, I think a lot of reps and agents probably pride themselves on, and for good reason. And they view e-signatures and online processes as automatically meaning that it's going to be a self-serve kind of process, and it doesn't need to be that at all. So I think it's just a question of educating that you absolutely can and will still provide that same level of service, but you're actually going to be able to, you're going to have more bandwidth. You're going to be doing less chasing of paperwork and, you know, less going back to the client to correct errors, and more time asking the questions about your client's needs. So I think it's just a question of reframing it in the minds of the agents.
And okay. I just want to add, I think Andrea's comment about champions is very important here. Is for adoption, you need to get people involved who are interested in making change. And once that happens, and they can then evangelize to the rest of the group, I mean, truly, the ability to do higher level work rather than chase paper should appeal to everybody in the operations group as well as to the agent.
Okay, good. Here's the second question. How can I be sure a document isn't changed during the signing ceremony?
That's a good question. So the documents, once they're handed off to an eSign platform, are managed by the platform themselves. And technically, the document only is going to get secured at the point of the first signature being applied. So one of the things that we talk about when we look at document and e-signature security is we didn't go into this today, but behind the scenes, what's making an e-signature secure is something called digital signatures, right? So it's like a cryptographic process that's locking down the document, basically it's the equivalent of a digital fingerprint of the document at the time of signing. You want a digital signature run on the document at each and every signature block. So if the first signer signs on a Monday and signer 2 only signs on a Friday, you're not worrying like the person asking the question is worried about. You're not worrying about the document being modified in between that time because it has been digitally signed from the moment of the first signer.
Okay, here's a question that just came in for Andrea. What are you seeing in terms of e-signatures on employer-signed docs?
Well, I mean, I would say it's not the first primary use case or the priority for most of the insurance companies that we're working with. But certainly, there's no restrictions from a legality perspective. And oftentimes, I think you'll feel that you'll see that implementation in those use cases is actually faster and easier than some of the other lines of business that you're going after. But yeah, no concerns or restrictions there.
Okay, here's another one that just came in. I'm not sure who this would be for, but the question is, what is the recommended approach for obtaining consent to do business electronically? Can this be done simultaneously with using an e-signature feature, or does it have to happen in advance?
I'll take that. But I'll do the disclaimer that I'm not a lawyer, so nor do I portray one on television. And even better than that is I can probably refer to folks to a webcast recording or many webcast recordings that we have with e-commerce law experts that do talk exactly about obtaining consumer consent, so e-sign consent to opt in for e-signatures. And I mean, the reading of the law, it talks about reasonable demonstration of a consumer's ability to receive disclosures and documents electronically. So that can sometimes become a little bit tricky or seems a bit tricky. Absolutely, it can be done as part of the e-sign transaction in the process. And the way it gets built into the workflow is just step one is e-sign consent. So, your lawyers work on the template, boilerplate messaging, legalese that they need to have there. And at the bottom of the document, it's not an actual signature that needs to be captured. It's just an accept, right? It's an acknowledgement and an acceptance of that e-sign consent language. And once you've taken them through step one of reviewing e-sign consent language and hitting next or hitting accept, you've demonstrated, you've fulfilled the requirement as a merchant of demonstrating, reasonably demonstrating the consumer's ability to receive documents and disclosures electronically. So it's a really easy step in the process.
Okay, well, we have quite a few more questions here, but unfortunately, we've reached the top of the hour, so we're going to have to end the webinar. But we will send all these questions on to our panelists, and they will get back to each person who asked the question. So again, we're going to have to wrap it up, but we do thank our speakers, and we thank our everyone for attending the webinar. And as I mentioned earlier, this webinar is being recorded and it'll be posted on the LOMA website very soon. And we'll send everybody an email telling you when it is posted. So we thank everybody and have a good day.